Oh boy, do we have a market recap for you. You've got to be happy when the January sell-off and the little bit of a losing streak that we had, it's over. It's over. The bull market is back. You know what's up. You know what's good. You saw the way the market finished today. It was green, green, and more green. Although, Brendan just mentioned a couple of things that were to the downside that I didn't realize. Not so great if you're in the EV space, you're in lithium, apparently. I actually had no idea that that was happening. But come on. Everything starts with what happened in the SPY, right? You know what's up. Everyone's been talking about it. The NASDAQ did its thing. The SPY, we're at an all-time high. It's not just a James Bond theme song classic, but it is what the SPY, the S&P 500 have done today. You're breaking that top. You're going and going and going and just continuing to run. So that's the big story. You had the NASDAQ do it. Now you have the SPY punch through. There was a bit of a chop, but there wasn't that much of a pullback. We just powered right through it. Apple definitely led the way for us. Some good news for them throughout the week. But the greater story today, and I don't like this is the thing. Like, you can talk all you want about the SPY catching up and the move in the market. Everything, and I mean everything, started with SMCI and the chips. Chips and no dip, none whatsoever. Because when I'm looking at what happened in all these different sectors, SMH 3.8%. I mean the Qs are up too. Bitcoin had a good day. Everything, look at all the green on the board here. It's all green, baby. It's all good. But you are definitely led by SMH. You're like, well, why were the chips so good the last couple of days? Well, I'll tell you exactly why, or at least probably why. I don't know. Because chips are great. Chips lead the world. Chips make the world go round, all that good stuff. But you had two things that I think led that charge. One was TSM and their strong guidance. So they're breaking out on the daily. You can see there's the earnings, big in yellow, breaking out the top, holding 110, fresh 52-week highs for Taiwan Semiconductor. And the other thing, you might have heard of them, Supermicro, SMCI. Anybody know SMCI? Let me know in the chat. Has anybody heard of SMCI? Anybody ever seen this chart for a split second? Yeah, that doesn't suck. The thing is, we all know what a bad-looking chart and a good-looking chart looks like. But let me get this out of the way. This is for everyone that trades, you already know this. But while everybody was talking about the move that Nvidia made last year and how parabolic it went, the thing that mostly traders, and I guess people that follow this stock, they knew that SMCI was doing some crazy stuff and pretty much just as well. They're more in like the services side of AI, but as it grows, they had their guidance out in front of their earnings, right? Pretty smart move. So out in front of their earnings, which do come later this month, they dropped surprising guidance beats or improvements, and then your breakout all-time high. So yesterday, TSM dragged the chips higher. Today, SMCI led everything to the upside, and you get this massive breakout. Now, keep in mind when you're trading this stock in particular, look at the nice consolidation, and it's now doubled up, 9% short float. SMCI has a 9% short float and was squeezing and holding volume above 400. So this could have some legs to that move. No questions asked. I'm not going to talk about SMH without actually showing you specifically what happened here. I know AMD certainly stole the show, but you're still in the midst of a continuation breakout on SMH. And that's the thing about a breakout trade. Like, you just need it to break out. You can say if it doesn't make this break at the top, then you don't actually have to get into something that doesn't break out. Like the last couple of breakouts have been fantastic, and the last breakout held support. So this could pull all the way back into 177. And at least until Nvidia earnings, I'd still think that would be a buy. After Nvidia earnings, all bets are off as far as I'm concerned, because chips, 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 but it could all come to an end and we could do a real dip come February 21st. That's when Nvidia reports earnings. You get all this good news. Meta's spending all that money, $9 billion. They probably spent some of that, but $9 billion by the end of this year. They're expecting, Zuckerberg was saying, you're going to get Google talking about it. You're going to get Apple talking about it. You're going to get all their clients talking about it. And then they're going to have to put up or shut up on the 21st. I think that sets you up for a bit of a fall. Just my 2 cents. Do not want to sleep on what else was going today. Look, man, if the regional banks are second on the board, you know it's been good. So gotta respect to the regionals. If you look at KRE, dip right into the 50-period moving average and now holding the bid. Now I'm not sure they're in the clear here just yet. You do have a general downward trend since that high that has to break. I think if it can get above 51 here, then you've proven you've dipped, you've broken out of that slight downward trend, and you're going higher. But you've got support at that 50 period that's put in. You've got support underneath that big $50 level as well. So things are starting to look a little bit better. I know the Qs, we've already talked about that, but I want to get to XLF. I know there's been, my stance on XLF hasn't changed. I understand Shawn has his point about the banks, not really what I'm looking for in the trade because XLF as the ETF is setting up just perfectly. You go over to the weekly chart on the XLF, and what I see is you've got the intact 37 resistance holding support, and whoops, I want to zoom in, not out. Holding support at 37, and then there's your 38 top. So all it has to do is close above 38, you're into the breakout phase of that trade, pop it on over to the daily chart. It dipped, it held 37, now it's going to try and break 38. I don't really care what the individual banks do or what the individual components do in the XLF. It's an overall financials ETF that is showing you 37 and 38. If it closes above 38 on the weekly, that looks like a good entry to me with at least a couple of dollars worth of room to the upside in what has been a strong charge for this particular name. No questions about it. It's not like there's a lot of things to look at. It's not to skip any sectors, but I do want to jump over to the Russell because small caps, you know, like if I had a penalty box graphic, we should have a penalty box graphic actually. I'd have put these guys in the penalty box a little bit after the fail of 200. Everyone knows how strong a push that the Russell had been doing, and you had a nice breakout. You had a big level get taken out at the 200, and then when we failed it, you've been pulling back in. But guess what? In strong upward trends, you're going to have healthy dips. And in particular with the Russell, you've had a healthy dip back into the 50 period where you bounced off 187. So that's the good. The concern that I would have going forward with the Russell is you're getting a lot of cold water thrown on these rate hikes. Or sorry, not rate hikes, in terms of the rate cuts. So a lot of people are saying the market's getting too far ahead of itself. The Russell is going to need to see these cuts to continue. So it's very important looking at that March projected cut, which is now a 50-50 proposition. If that doesn't happen, the 187 probably gets tested. If we can hold that level and they do cut, I think you see us back above the 200 level. So it's had a good start bouncing off this key price level. A, holding that in the short term. B, seeing those rate cut odds go back up past that 70-80% where they were before and off of this 50-50 stuff. You need to have those early cuts to maintain the momentum in the Russell that we had a bit earlier on. So I think that's going to be pretty important. Now, CMAC just saying there will be March cuts. I'm calling it. CMAC, we're going to hold it to that. I'm just kidding. Look, I lean toward, I think they're probably going to be actually paying attention. They'll say data dependent, all that good stuff. I think they really are. I think when you look at what the market is like, look at this board. It's all green. Everything is so super strong. They see it. I know that's not their mandate, but they see what's going on here when things are heated. And they're going to be keeping ears to the ground. If there's too much strength, if there's just too much strength in the labor market and the market's at those highs, I don't see how they're going to be able to pull those cuts off. I tend to be in that camp. I think they would. It's hard to do when you look at what's going on right now. But who knows? We'll see what happens with it. Let's get on to it. Oh, I haven't been moving the topics here. We're not on SPY all-time high. We already did chips and dip. China? Talking about China? What the hell happened in China? I don't know. You tell me what happened. No, but in all seriousness, you had to be under a rock today to have not seen what happened with some of the Chinese ADRs. So it behooves us to break this down, understand how something which was so under so much pressure, like look at the chart on the daily of Alibaba. I'll use Alibaba as like our little proxy here, as to like what the heck happened at about noon And I could pull up JD.com. I mean, I could pull up Pinduoduo. Like all of these did exactly the same thing. Like what caused this buying action? So the only thing that I was able to find, you had a major brokerage in China essentially halt short selling in their equity market on specific names for all of their clients. Now it's one broker. I don't know how, I'm not an expert in that market. I don't know the kind of effect it's going to have in a broad sense. I can tell you what's happened in North American markets when they've done things like that. You guessed it, things tend to reverse. So clearly the reaction here was extreme. Now the only thing that has given me pause for concern for a little bit is that news was overnight. Now I saw Zero Hedge tweet this, start talking about it in the midday as this was going. However, after I did a little bit of digging, I saw this news reported by multiple people overnight. And yet we were still gapped down this morning, liquidity grabbing underneath, and then all of a sudden we break out late and you get that news. Now here's the beauty of all of this. Well, if we missed, here's the best part. Here is the best opportunity. I look at Alibaba. Here's your 70 level on Alibaba. You've made a wipeout bottom on this daily chart underneath 70. You have yet to break that out. You're under the 50 period, you're under the 200 period. If this is the start of a cycle for these names to be buyable, investable, tradable to the long side, then it's a great catalyst and you're still able to get this if it breaks out the 70 level. No questions asked. Now, you can express these things any way you want. Whoops. Well, I don't have to. Well, I don't want KRE. I want KWeb. See, I click on it. I want KWeb. Get out of here. Get out of here. I want the Chinese Internet ETF. So if you're trading this, now you can pick names. I showed you Alibaba because the 70 setup's good. Pinduoduo is a rocket ship. That's been a stock that's been immune to all of these issues. But if you look at KWeb here, this is also giving you a chance. There is your 23 bottom at 24 bucks. So what you also have available here in KWeb is it hasn't really closed above that 24 again. So this could make the bottom, wait for it to retake that low, and then jam to the upside. You got room to the 50, room to the 200. So if there's continuation to this move, and this was just the start, no problem, no worries. I always say I would rather join buyers than try to make it happen all by yourself. Don't try to make fetch a thing. Let a bunch of other people say fetch, then just sound really cool when you say it after the fact. Do it the Apple way. Is Apple ever the first to do something? Nope. They just do it best. So join the party that you know is good and make the best of it, right? I mean, sometimes you go to a random party and it's fantastic. Other times you're walking down the main street at university, you look over, that looks like a pretty cool keg party. It's like 12:30, and like, that one looks good. Let's go into that one. You know what's banging. I don't have to guess. If you go into a bum party at like 10:30, like, you're leaving anyway. So you might as well join the buying instead of try to make it. So I promised you guys we would do this. We got 15 minutes here, and I wanted to get to the halfway. We're not going to do the roll call just yet. We could do a roll call if you wanted, but I want to do a Q&A. I always say that let's do a Q&A and ask anything here, guys. Well, I have to turn. Okay, no, it's fine. No, when you move the light over here, I'm going to turn. I'm not, don't do, Fabian, don't do that. No, don't do that. Don't do that. I got to know where I'm looking at. I am not a professional broadcaster here. I'm more of a Ron Burgundy. If we had a teleprompter, I'd just start reading it. If I get asked questions in the chat, I'll just start reading it. See, like, I'll even read this. Mr. Weed, I used to grow sour diesel in, whatever, I'm not going to, I don't know what you're talking about there. Well, that's a good question. YZ here. Why you and Shawn hate Affirm so much? LOL. So two things. I think Shawn hates Affirm way more than I do. Affirm was one of my best pandemic YOLO, everything is going to the upside trades. Because I did own it in my personal account for a trade. I mean, that it is what it is. Like, everything was going up. It was one of those frothy names. I took my shot at it. It was great. It was fun. It was fantastic. So the reason why we have some hatred, I'll show you on the chart. It actually makes sense why we both felt the stock was a short. A couple of things here. You've got debts at a high level. Obviously, we know household debts are higher, credit card bills are going up and all that stuff, some concerns about the economy, yada, yada, yada. A lot of that hasn't come to fruition, but you've got to figure if there was a slowdown, these guys are going to take a hit. Throw on top of that where it went to off the bottom. So all that pandemic nonsense, which was a heck of a lot of fun on the way up, but if you didn't take profit on the way up, you got absolutely burned on the stock. This is $150, man. That's $165. That's $175. But since it made the low, breaks the bottom, first dip, $50. Dips again, lower high. I mean, it ran on a weekly chart. You go back to October, this was at $17. It tripled to 50. It tripled to 50. On what? On what? You tell me. You tell me if it deserves to be a triple up. But it got to that monster level, which was support. Eventually, when it broke, turned into a resistance level. It got there too fast, and it failed to 50. And when something is in downward trend, I think you short it every single day. I say the same. I've said the same thing about. I have nothing against Lucid. I don't really know. I'm not a car guy. I can't tell you any. Like I'm not Randy. I can't wax poetically about this. But it's like so. One gets to a resistance level. I think it got there too fast. I look trend short. A stock like this just goes down every single day. I think you just look short. Right? Like I try to keep things relatively simple when I can. So that's what we're all about here. It's bad, LOL. BTC shorts got hosed today. Yeah, they did. So many. I'm not going to wrap. I have nothing ready for you guys. What stock, Anthony Kerr, what stock bit you that you absolutely never trade anymore? That's a good one. What stock bit me? I can tell you back. I know our old trading floor, I've said this before. When Shawn and I owned our own trading floor, the answer to that was BAC. We could never make money on BAC, so we don't do it. The stock that bit me that I do not touch. I'm thinking about it because I don't want to give an answer that's like I could tell you I haven't traded Sundial in a while, but I actually made money the last time I traded it, so I can't say that that's true. You know what? It wasn't something that I lost on, but the answer is SMCI. And I was explaining this to Obi why I don't trade SMCI, and today. It bit me today not trading SMCI. But the actual honest answer was SMCI. And it was a day that I was doing the show with Max. Shawn was away. And I was trading SMCI. And it was literally my biggest winner that week was on SMCI, my top trade overall. But what happened was I got out of the trade and I was reviewing it. And I realized that what I thought I was risking, I was not risking based on the spread and what would have happened if it had broken against me. And I broke every single one of my risk rules, and how much I had won had it not worked would have been catastrophic. It was like I wouldn't have been like better than 1-to-1. It would have been nasty, and if I'd missed my stop, it could have been much worse than that. So based on that, I don't touch SMCI because of that spread. Now clearly today, you could have broken every single rule in the book on SMCI and just gone long at any point. It would have worked out for you. But it was a spread, it was a lack of liquidity, why I don't trade the stock anymore. And it wasn't something that I lost on. It was just once I realized in a deeper sense what the risk reward was, on a winning trade, I decided to stop trading. It's the most honest answer I can give you because I can't think of something that recently has bit me that I don't trade anymore. What else we got in here? I love the questions. It's a great question. And I'm going to think over the weekend if I can come up with a better stock that I had a losing trade on. I know there's setups that I will stop doing if they're not working out for me, but certainly that's a great question altogether. There's a couple of good ones here. Henry Liu, how has your day trading style changed over the years? For Shawn, he is now holding on longer instead of taking exits every 10 cents when it goes in his direction. So my journey for trading has been a wild one. I started out momentum trading as a trainee. I then graduated trading small cap stocks, momentum trading small cap stocks. The second I was making any money, I discovered penny stocks, and I made my first real bank. I was positive momentum trading small caps, and then I moved to penny stocks. And my graduation month on small cap, I tripled my profits the next month moving to penny stocks. And then I was just a penny stock trader because that's where the money was. And I went from trading penny stocks because you would get a rebate back then. I became really good at rebate trading. And then there was someone introduced me to trading buyouts. We had a bunch of money trading buyouts. Then we were introduced to trading the European markets, which were not as sophisticated. Momentum trading some Europe at closes and stuff like that. That was very profitable. '08 happened. And yeah, everybody and their mother had to go back to momentum trading, especially the banks in '08. You did a bunch of that as well. So like it's been a bit all over the place, but I think you're probably more interested in what's happened during the show. So during the show, and you've probably seen this, the last 3 weeks I've had 2 red days. And one thing I'm doing a heck of a lot more of is a bit different. I'm doing more of what suits my style on breakout trades and support and resistance trades. And that is taking my profits where they lie according to plan and not getting peeved when I'm out of the move too early. Because it's just something, like the other day when Nvidia broke the 500 and I went 500 to 510, it's like for every time I do that, I know that I'm less likely to give up the move. I take the range that I'm expecting because that's what I've priced my risk for. So when I'm getting out too early, it's part of my plan. When I'm getting, this is the exit here at the first 20%, and this is the next exit. Like Nvidia, it was I got some out in front of 1s, I got some out in front of 2.5, I got some out in front of 4, I covered the rest at 10. That was kind of my plan. If I saw weakness at those areas, I was covering. Now, could I have gone long again at the tops? I probably could have and found a second trade, but I've been way more disciplined with executing on my plan, not averaging in, not holding past stops, making sure I take profits where there's decision-making point. So I've been doing a heck of a lot of that. That's been my biggest change because I found I was trying to improve mainly by just simply holding on longer. But then I realized before I do that, I want to try to do more of what's working for me the best and then do that. So that's what I've been doing, if that makes any sense. I hope that makes sense to you there. Fantastic question, though. So there's been a few. What else we got here? I know general thoughts on AMD. I actually said this to Obi. It wasn't Obi. It was Brendan. I'm thinking about where I might trail some AMD before they have their earnings. I think it's a rocket ship. They have a lot to justify based on their PE because it was already pretty ridiculous, or forward PE, I mean. So it could be a little bit tricky for them to beat. I might trim like 5 to 10%, and then I don't know where I'm going to park that just yet. But that's my thought. It just feels like there's before earnings and at earnings there could be a bit of a pullback there as well. Did mention, I talked about Nvidia already. Craig, who has been your favorite guest? Ooh, who's our favorite guest? Well, look, I love all the guests. I absolutely love Frank Caberna. We've had a lot of fun. I love it when we're able to have, I mean, guys like JC Peretz on the show, because we don't get them all the time. I really enjoy listening to, the answer for me, the answer is Danielle Shea and Frank, and I'll give you the reason why it's those two. Because I don't, Michael Noss, the thing about Michael Noss is, like, we've been trading a long time. He actually has been trading a really long time. We're both like technical traders. I love riffing with him. It's fantastic. It's a lot of fun. But the reason why it's more honestly Frank and Danielle Shea is because when Frank's talking, I'm just sitting back and learning in a different way. And when Danielle's talking, I'm also sitting back and learning a different way. I don't know options very well. And so I get to learn something a little bit different when we have Danielle Shea on. Like, that's what I enjoy. That's what I enjoy. I love it when we have a guest on talking about a sector that I have zero knowledge about, because then I get to learn something new that day. So that's what I find cool. Okay, call that corny or lame, but that's just true. It's good to be able to joke with Raheem and all that kind of stuff. I talk with Raheem all the time. I know what he's thinking. Shawn and I talk to Raheem all the time. Like, when he comes on, you guys learn a bunch of stuff. We kind of have already spoken to him already. There's only 5 minutes to go, and we'll keep going here. What else we got? JD versus Alibaba. At these levels, I'd buy a break of Alibaba at 70. It sets up technically really well, and I have not been paying attention to JD. I think the fundamentals are pretty good on Alibaba. I know JD's had some issues. I know Baba, there's been some concerns about them growing too much and then getting too bureaucratic. That is obviously true, but I'll just leave it with Baba there as well. Derek saying his worst stock is Neal. You should always know what your worst stock is. The thing about, and I think the reason why that question was asked about what is your worst stock that's burned you that you didn't go back to, it's because you can have a stock where a trading setup that works for you 8 times or 9 times out of 10, you put it on in that stock and it works half the time. And you don't know why, but it's something about the way that stock is traded or whatever algos are trading on it, whatever the counterparties are trading on it, it doesn't work for you. That's important. Oh, here's an example. For any technical setup I ever see on Ford doesn't work for me on a day trade. Swing trading setups look good. On a day trade, they never work. I find that if I'm trading Ford, it has to be a simplistic, even dollar, stupid gimmick kind of trade. But if it's based on my chart, specifically my 15-minute, never seems to work out. That's just Ford. It just came to my mind just now. What else we got here? If I don't like liquidity or spread, I don't trade it. That's great, Peterson. I agree with you as well. You should stay away from those things. If I had to put $1 million in one stock to become 10 million in a year, you're asking what would go 10x this year? I mean, I don't know. I always found those questions are kind of like a little bit silly. But because if you're looking for like a 10x, I don't think there's nothing that I think is a 10x that is worth putting $1 million in, because that's a gamble and a long shot. Like that's not a reasonable amount of my worth that I would put in expecting and looking for 10x. Like I'd put a small amount of something that I think could go 10x. Like what are the types of things that could go 10x right now? A gamble on anything in the EV space because they've been beaten up so much. Do I think Nvidia can go 10x? No, I don't. I think it's a good buy. I don't think it can go 10x. No questions asked. There's probably some penny stocks out there Fabian's talking about that could be some good plays. Maybe you're looking for squeezes. I haven't done enough work on those. That's probably what you're looking for. I don't really have any of those for you. I'll just be honest with you. He said pharma shorts. Lily's already happened. You don't want to gamble there. So at the end of the day, like it is what it is. I'm not going to make something up because that's not fair to you. Then someone might be listening and saying, go ahead and buy that. So I wanted to address the question. I didn't want to leave it out there. So what's this? I'm trying to read the name here. T-Bone Steaky? Whatever. T-Bone Steaky. That's what it looks like, even though it's kind of worded, it's spelled a little interesting. Best tips for beginner traders who get in their own heads a little bit too much. This is going to be a boring tip, but every single strategy or trade that you make, ensure that you have the type of plan for that trade that is quantifiable. And what I mean by that is, if you're taking a breakout, Uber 65, because I know what happened today, my entry is if Uber breaks this level, take X, stop goes at X, profit takes at these levels. If I see buyers above, add here, this much, and then hold to this, like all that, those if-then statements, so that you can go back and quantify if you don't take it, whether it would have worked or not. If you see the setup somewhere else, whether it would have worked or not. And the other thing you have to do, once you've done that, you have the ability to look at different strategies and how they work. One of the biggest mistakes I see traders do is have no concept of what actually pays them or works for them. Like if you just trade Uber, like today I had 2 trades on Uber. I'm going to go to the chart here. I know we only have 1 minute left, but this is a really good question. So I want to make sure I get this right for you guys. On Uber today, and I'm going to go to a 3-minute chart because that's what I was trading off of. So let's just quickly do this so we get this right. I was looking at a 65 breakout. That's one trade. And then from there, I was doing VWAP dip buying, which it ended up holding very well for the rest of the day. So if you just look at your P&L, I was up on Uber today. What does that tell you? Literally nothing. That's great, you were up. Who cares? What did you do that worked? The breakout trade was okay, and then it stopped back out. But the dip buy held VWAP, held VWAP, reload. How did you do reloading? Where did I get out? If you can quantify those 2 separate trades, you know which one works better for you. And when you're in a slump or when you're looking to solidify what strategies you should focus on, maybe you'll find out that you do better on uptrending stocks at highs, dip buying into VWAP and joining the trend. Like that's an actual setup trade that you could be doing. So once you do that, you'll know where you're getting paid. And that's very, very important because the only thing that matters is putting more capital to the things that work for you. Not just putting more capital because you're up. Traders scale because their P&L is up and it's a mistake. Right? You should be scaling. You do want to do that, but you should only be scaling in the things that actually are paying you. And if you make money every day trading AMD, there's probably 5 different setups that you're trading. And if 2 of them are working and you're scaling the other 3 because you happen to be up, it's a recipe for disaster. And that trips up a lot of traders early on. So document everything, quantify everything. I know it's boring, I know it's work, but trust me when I tell you, it's worth it in the end if you have a productive trading career. All that hard work does pay off, right? So you might as well go ahead and do it. So that's a bit long-winded. I know time is over. I didn't even get to a roll call here. So let's quickly do it. Let's drop it. If you want to shout out, now is your chance, because I see, and apologies for everyone I didn't get to on their questions. Mr. Weed, shout out to you. Anthony Kerr, For Profit. Professor Love, what up? Tony Price, Puff Puff Pass. Oh, goodness. Mr. Memes in the chat. Jacob in here. I see Dean Floyd, Sailor Moon. It's flying too fast here. Juan Padilla, Mr. Peanut, Derek Thompson, Streamlabs. What's going on here? Bears versus Bulls. We love you. Howell Capital Trading. Bright Awakening, BGZ, Igor, Bristol, Andrew Chow, Benny, Rich Naples, Moho, Future Ready. What up, Future Ready? Had pleasure chatting. You had some good questions here today as well. Super Heart, what up? Professor Love, Pranya, been a hot minute. Chris Shrum, Chris Butler, Michael, Mac Gonzalez. I love it when you got a nickname in there as well. Bbot 5000. Bbot, I like it. That sounds pretty good. Giving them sirens. Neal MacArthur, JD man. Whoa, 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 whoa. Oh, hold on a second. Neal MacArthur, hey, what up? You got a great name. JD man. I didn't even give my NFL playoff picks, but if you put KC Chiefs in there, you know what I'm about to say to you right here. The Buffalo Bills are winning this weekend. Now, I understand KC's going to put up a good fight. As a matter of fact, I actually think Travis Kelce's going to score a touchdown. I know I said he's going to have a bad game and Taylor Swift and all that. He's getting in the end zone. But the Bills are going to win this game. The other thing that I think is San Francisco is going to absolutely blow out. Just San Francisco to cover. End of story. But if you're looking for some in-game, like who are the players that are going to do well, I take just whatever the receiving prop you can find on James Cook. I'm looking for the overs there. I think they're going to have to utilize James Cook, Buffalo is, in the passing game. So I think that's going to be pretty important. But I shouted you out, JD, man. But just understand that I'm a Bills fan here. I own a Kansas City Chiefs jersey. Jamal Charles, as a matter of fact. But I'm not liking the Kansas City Chiefs this weekend. You know what's up. Terrific Tech. Shout out to you as well, SharePoint. There's a lot of you. I can't get to them all. Thank you so much. We had a lot of fun this week. It was a great week of trading. You know it'll be fantastic next week. I really enjoy getting to do this every now and then to fill in for Shawn. He'll be back next week to give you a market recap. Before I get out of here, I want to remind everybody, tomorrow morning at 10 o'clock, right? At 10 o'clock, the podcast will drop. So it's on Apple, Spotify, catch it on YouTube as well. And after you've listened to that, you'll be ready to start the next week of trading, which you know is going to be another banger. So take care all from Trader TV Live. Have a fun weekend. Rest up. We got more trading to do next week.